Hello ladies and gentlemen, and welcome to today's morning markets, the start of a new month. And if you'd watched Friday's Do More With Your Money show, you'd have heard Chris Leyland, Director of Investment Strategy, mention that in July we did have some improvement in markets. So today, just to expand on that a little, I'm joined by Jeff Casson, who's the Chief Investment Officer here at True Potential. So Jeff, better markets in July?
Certainly, when we look at both equity markets and bond markets, a much better performance.
And what's behind the positivity? What has it that's turned the tide slightly, or?
I think there's a couple of things that are supportive of the returns that we've seen. Probably firstly is around monetary policy. A bit of a change in how the market's thinking about how high interest rates have to move in the US in particular. Also, we've had company results from a number of companies across the globe, really, as we have coming through July, and they've generally been okay to maybe slightly better than where people had expected them to be, and that's certainly helped equity markets. So we look at the US, we've got the S&P 500 up around 9% in the month, that more growth-oriented NASDAQ up over 12% in the month, and that's all very much tied back to that expectation of interest rates. Indeed, the only equity market that we didn't see positive returns from was emerging markets over the course of July.
So central banks have had a role to play in the past month, and those actions have had some effect in terms of helping with inflation, or will it be later in the year that we potentially?
That point's probably later in the year when we may start to see inflation roll over, particularly in the US. Central banks in the month really continued with their push and sole focus on inflation. So we think back with the Bank of Canada increasing rates 100 basis points, with the US 75 basis points, 0.75%. Second meeting in a succession of doing that. So really the policy objective is still very much on controlling inflation. The market is starting to focus a little bit more on some of the economic data that we've discussed during the month that points to a slightly slower momentum in the economy and a deterioration there. So you have a pull and a push really between where policy's going, but where economic data is also going as well.
Yeah, so some improvement. And for the coming month then, for August, what is it that clients should be watching out for? What is it that will...
There's a couple of things that we'll focus in on. We'll continue to hear company results, which again give insight into both what's happened, but really at this point in time it's about how companies are thinking about the future. And so continuing to look at company results is important, and we'll continue to do that through morning markets. We'll also focus in on economic activity and how that is evolving over the course of the month. The start of the month, we just have our usual purchasing manager indices data points. We've US unemployment on Friday. I think the other thing that's really a big focus this week for us here in the UK, given the sensitivity of all of us to interest rates, is what happens with the Bank of England on Thursday, when we've got their meeting where they'll set out their change in interest rates.
And do we know any expectation yet of what could happen there? Is there a number
in mind? The market's a little bit split at the moment, whether we see 0.25% or we see 0.5%. Probably going towards that larger increase would be keeping in line with what we've certainly seen from the US last month, the change to ECB policy, etc.
And what would the thought be behind that? What consequences potentially would we then see in terms of an interest rate going up like that?
So I think really the consequence is just about the impact that it has on growth. Slowing growth to try and help bring that inflation down from the high levels that we already have, but also the potential that those levels increase further. The UK, that's particularly pertinent because we've got the energy price cap. That's going to further increase, which is not going to allow inflation to roll over as we might see in other countries.
I mean, I guess the thing would be there is no quick fixes. These are longer term things, and over time we see the effect of these implementations.
I think that's right. Monetary policy always works with a lag. And whether it's 6, 9 or 12 months, we can probably debate. It's certainly not 3 months. So these things work with a lag, so we probably start to see the impact of that in terms of monetary conditions through into 2023.
Which goes back to something we discuss a lot at True Potential: investing for the long term, setting your goals, sticking to your goals, and also add diversification, global diversification. And that's why here on Morning Markets we do talk a lot about the US, those different regions.
But it's important to bring out what's happening in all regions, and that's what is really important within a diversified portfolio. And that's when you think about that performance that we saw just in July. There was differences between the overall return picture between equities and bonds. Also really interesting developments in currencies.
Yeah.
You know, I was surprised this morning sitting down looking at one chart on the sterling against the dollar, just seeing over the course of the month it's effectively unchanged.
Yeah.
But cast our mind back to the middle of the month and we had sterling dollar at 117, 118. Today we're at close to 122. So lots going on in asset markets.
Yeah, lots going on, and the place to stay updated with that through August will be right here on Morning Markets with
Certainly.
yourself and the team, and also our weekly Do More With Your Money show where we'll discuss all these points in full. So I'd like to thank you today, Jeff.
Thank you.
Very good to reflect on July. It's nice to see a bit more positivity. Hopefully in August we'll also see that. So if you subscribe to the True Potential YouTube channel and join us every day on Morning Markets, and we'll keep you updated with developments. Thank you very much.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.